Hello, it's a rather dark and dreary Tuesday the 2nd. New year, same me. I'm FxPlew and this is the market brief. So we can expect a fairly slow start to the new year. New drivers are yet to take effect in the market. Speculation will continue over when Sunak will call a general election and when the Bank of England will start to cut interest rates. And the MPC needs to appear a little more proactive than before if they want the market to accept that they are on top of declining output. But where 3 MPC members still voted for a rate hike at the last meeting, it does rather give the impression that the MPC remains behind the curve. Inflation data has started to post meaningful drops, and the headline rate for December is expected to have fallen once again. That data is due out on the 17th of January and is expected to be close to 3%. Quarterly GDP figures will not be out until early Feb, but most expect the economy will have fallen into a recession in Q4 2023. Happy New Year. Over in the US, things are looking pretty good for a soft landing. Some naysayers still call for a recession this year, but the data suggests otherwise. And if we rewind the clock back by a year, 2023 started out with fears of a recession as interest rates continued to rise, but the year ended with a remarkable show of economic resilience. Last year, on average, there were about 230,000 new jobs added each month. Yes, that was skewed higher by the first half of the year. But don't forget, half of Wall Street had called for negative payrolls numbers in Q1 last year. But we still ended with the unemployment rate under 4% and some pretty strong numbers being pumped out in the monthly sweepstake. Speaking of which, New Year treat for you, we go again on Friday. Early forecasts are for a headline reading of about 160,000 new jobs, while the unemployment rate may tick up slightly to 3.8%. My New Year's resolution is to get within a country mile of the headline number, so we'll just have to see how that goes on Friday. Meanwhile, in the market, the dollar had a fairly turbulent December in thinner trading Christmas conditions. Sterling rallied to 128.30 against the dollar, and the dollar index fell briefly down to about 100.60. However, as normal liquidity returns to the market, there's little reason for sterling to remain supported at those levels. We kick off the new year from around 127.30 against the dollar, 115.45 against the euro, and euro dollar is around 110.30 on the open this morning. So yeah, Q1, let's do it. Happy New Year.
If you do not have a clue, then just tweet through and ask FxPlew.